When you can actually see your profit for the year in dollars and cents, it gets you more in the notion of selling corn, knowing that I can lock in a $50,000 profit or whatever the profit is. You want to lock it in. If I know I can make that much profit in a year, I will be in business next year.
Good afternoon. Welcome to GrainTV. My name's Cody Bills. Today is Monday the 27th. Let's turn over to the grain hedge trading platforms here. We closed off the day. Corn trading down 18 3/4 cents on the December contract to 384. Soybeans down 31.5 cents to 933.5 on the November contract. And Chicago wheat here down 9.5 cents on the day to 502 for that September contract. Now, one of the reasons why we traded off so sharply here is because the Chinese stock market dropped 8.5 cents on Monday. This isn't the main reason why we sold off, but I think this was a multiplier in terms of the overall effect that we saw in the grains today. When we get an 8.5% decline in any major market, it'll cause funds to have to either reduce exposure to certain markets. They may have to rebalance based on certain conditions that they have to abide by. But in general, it forces some liquidation in certain areas. And I think what we saw today is the grains, which have been selling off for the last week, having additional selling pressure as a result of that, and kind of multiplying the selling effect here in the grains today. In general, the message that I would have to producers is that we've sold off and given back an awful lot of the gains that we added there in the middle of June to the middle of July. We're over 62% retracement. I would say at this point you do not need to be panicking. If you have revenue insurance at this point, you should be getting covered on any sort of deterioration in prices moving lower. I do think with the intensity of the selling pressure today and the fact that it was really spurred on by outside markets such as the Chinese market, which, like I said, sold off 8.5%, I think the fact that it was spurred on by that could in fact be a reason why when we find a bit of a bottom, we could snap back relatively quickly. Not snap back to the highs that we printed back on July 14th, but I do think that we could have some upside potential in the week to come. Now, I guess one of the major questions that I would pose to producers is, do you think that we can continue to sell off without any sort of fundamental or any sort of guidance here on what yield potential is and really how much acreage was left unplanted? I think that it's going to be very difficult for us to sell off sharply from this point without any sort of guidance there. And so I think that the probability right now is probably more in favor of a rebound as opposed to continuing lower. And so I would encourage producers to be patient at this level and to not jump into corn or soybean sales at this juncture in the market. So just keep that in mind. Of course, this is all very contingent on your own individual position in the market. So that advice, that is not a blanket piece of advice, and I would encourage you to give us a call. Our number is 877-472-4607 if you want to just kind of discuss your personal position. So, of course, like I said, this is not a blanket recommendation by any chance, but I do think patience at this point after a significant amount of selling would probably be beneficial here in the weeks to come. Let's talk quick about the export inspections numbers that came out today. You'll notice export inspections for corn, soybeans, and wheat were all down over last week. Corn, we saw 1.1 million metric tons. Soybeans, 120,000 metric tons, down from 306,000 metric tons a week before. And wheat here, 439,000 metric tons inspected for export. You'll notice, let's take a quick look at the chart. I just want to touch on a few items here. First of all, we talked about this last week, 398 being an area where we expected to see some sort of support, and we gapped down and sliced right through that very quickly. And like I said, we had a lot of intensity in the selling pressure here today, so it just was not able to hold. That area could provide some resistance here in the weeks to come if we get any sort of snapback, so do keep that in mind. Soybeans, you'll notice we also went through that 100-day moving average very quickly, and we're now approaching these areas where we were trading back in the earlier part of June. So I think one of the things that we want to pay attention to now is, of course, weather. And I know that the weather has not been favoring the bull market. It has been favoring crop development. When you look at this week's outlook, you'll notice it is hotter than normal on Monday, Tuesday, and Wednesday of this week, and it's expected to be cooler during the second half of the week. We should continue to get showers throughout the Midwest, but really not an excessive amount of them. Most of the showers that will be kind of above and beyond what we typically see will be in parts of Iowa and the north or southwestern part of Wisconsin and southeastern part of Minnesota this week. Next week, it looks as though we could get some more showers throughout the Midwest, but for the most part, it should maintain cooler than normal temperatures. And then also today, we did get crop conditions, and I think this is another reason why we did have some selling pressure here today. Anticipation for corn to increase or to be unchanged, and soybeans to increase. All that kind of has a negative impact on the market. What we saw here when crop conditions were released is that corn conditions increased 1% to 70% good to excellent. Expectations were really for only a 1% increase. Basically, what we saw is 70% good to excellent. Last week, it was 69% good to excellent. So in general, we had an improvement in overall corn conditions, and that was a little bit bearish here today. When you look at soybeans, we were unchanged on the week. Market was expecting about a 1% increase. So I guess you could look at that as being somewhat bullish here. I don't necessarily think this is a big enough surprise to really cause the market to do any sort of major turnaround. I do think, though, considering the price action that we've seen over the last couple of weeks, maybe this could have a little bit more amplified effect on providing a little bit of support and a little bit of a bottom here for soybeans, which has been selling off for the last couple of weeks. Winter wheat harvest, 85% compared to 80% normal, so we're now ahead of pace here for winter wheat harvest, and spring wheat conditions improved 1% to 71% good to excellent, up from 70% last week. Guys, that wraps up today's show. If you have any questions about what we talked about today, please give the office a call. Number's 877-472-4607. These markets are moving very fast recently. We've had sharp movement higher followed by sharp movement lower. It is a good idea to have access to live quotes. Having access to that sort of information allows you to be in touch with these market movements and be able to stay on top of the markets, say when it moves to a price that you in your marketing plan designated as an area that you were looking to sell. So having access to these markets allows you to stay on top of your sales. Having access to be able to alert you when certain conditions occur allow you to really execute a marketing strategy that you have planned out early on. So if you would like to have access to live quotes and you would like to be able to set alerts for the market and be able to see that on your mobile phone as well as an email, you can give us a call. The number is 877-472-4607, or take a 14-day free trial of our trading platform at grainhedge.com. Thanks a lot for tuning in. We'll see you here on Tuesday.